Hello and welcome to Elevation Training. Today is how to enter the purchase of an asset with a loan into your Xero files. So I'm going to run through how to set this up in your Xero, as well as how to get it sorted so that you don't have to ask any questions to your accountant. So here we go. I do all my training in Demo Company. So this is the company that you can access from your file just by clicking on the down arrow where your business name is. And the great thing about Demo Company is you cannot break it, because if you do break it, it just resets at the end of the month and it'll start again. So a Demo Company looks the same for everyone. What happens is the dates are generally different depending on what day you log in. And I've logged in a couple of times recently, so my dates may be different to your dates. So what we're going to do is have a quick run through. Now in the library, I do have a download as well. So if you're watching this on the library, then grab the download and it gives you a cheat sheet as well. But I'm just going to run through on the screen today of what it is that you need to do. So the first thing we're going to do is have a look at your chart of accounts. So your chart of accounts is where you code things to in Xero, and it's essentially that list of what sort of things. I'm going to go one bigger. Here we go, and hide that one. So it's that list of where you're coding a purchase or where you're coding money coming into your bank account. Now with bookkeeping, there's always two sides to the story. So there's a debit and a credit, an in and an out, depending on what type of expense or revenue it is, or assets and liabilities. So today we're talking about buying a new car. So this car is an asset. So it's something that you own. So we're going to make sure that we've got somewhere to code it to. And in Demo Company, there is no car account. So we're going to add a new account. And it's going to be a fixed asset. So always our assets are fixed assets when we're buying things. We're just going to use a number that hasn't been used before. So 730 hasn't been used before. And I'm just going to put in here motor vehicle cost. And we'll just leave the rest. So nice and easy to set up. So now we've got a motor vehicle cost, and we'll quickly jump in and put the accumulated depreciation in as well. Now you don't have to do this, because as accountants, this is a little bit more complex, and you can definitely leave this for us. So it's not going to be something you use when you actually enter the purchase of the vehicle. It's more an accounting end of year thing. Accumulated depreciation. And there's no GST on this because it's not actually a buy or a sell. So those are the motor vehicles. So we're going to put the bill in and it's going to be coded to motor vehicle. And on the flip side, we're setting up a loan so that the vehicle itself is purchased by a loan. So yet again, we're going to find a code that hasn't been used yet. So we can do 900, that's no problems. And it will be a non-current liability. And the reason why we put non-current liability is non-current, I can't use 900. The reason why the reason why we do use non-current liability is because the loan generally goes for more than 12 months. So a current liability, it will be paid off in 12 months. Non-current liability paid off in more than 12 months. Loan, Hilux, Toyota Finance. And if you know how much the repayments are going to be, I always like to put this in here as well. Because then we know when you're doing the coding that it's going to exactly the right place. So if you code it accidentally to motor vehicle expenses, then this putting the dollar figure into the amount for the loan account will help you with your coding, make sure that it's the correct thing. Now tick this enable payments to this account. And what this means is when we put the bill in, we can then use that to pay. So we can pay from this finance account here. So we're going to press save. And so now we've done all of the setup. So we've got our motor vehicle and we've also got our loan in there. Now in the instructions, there is one more account to set up as well, which I will do. So oops, non-current liabilities again. 902, unexpired interest on Hilux loan. And you can put as many description as you like in here, up to 150 characters. So it's not restrictive at all. Okie dokie. So now we've got all of our accounts. So we've got our asset account and we've got our liability account. Now we're going to put the bill in. So bills to pay, nice and easy. Wait for my internets to catch up. We're going to click on new bill. We're buying this directly from the car yard. On today's date. Now it's due today, so we'll just put a +1 in there. New Hilux. And then you can put your rego number in, and I've just made that up. It's not mine. And you can add all of the details in. You can use this little paper button here to save a copy as well, so that we don't have to come and ask you later on. And I'm just going to put it in as $20,000, and it will be into that motor vehicle cost account. So this was the one we just set up. Yes, we're being charged GST on that. And yes, let's make it tax exclusive. So it's $22,000 including GST. So we'll approve that one. And then what will happen is we've got the make a payment. So a couple of different things. No thanks, HubDoc. A couple of different things. So if you have made a deposit of this, whoops, for $2,000 out of your bank account, we'll just say today, and paid from the business bank account, we can put in here deposit. And what this will do is part pay this invoice. So it will be then a $20,000 left over. And then once the $20,000 is left over, well, then we can open this up. No, we don't want to send a remittance. Thank you very much. Then we can open it back up and the rest of the money will be paid from the loan. So the loan, the Hilux, so because we ticked that enable payments, it comes up in this drop down for pay bills. So if you haven't got it ticked, then go back to that chart of account and tick that little enable payments and that'll come in here. So paid by a finance company and away you go. So that's how you enter the bill in, and you can mark that bill as being paid from the loan account. And we'll just close that one out. So it's no longer awaiting payment, it's sitting here in paid. And like I said, you can add your documents straight into there, any documents from the finance company, any documents from Toyota or whatever, so that it's all available on that bill. Now, the next portion is to work out how much the interest is for the year. So I'm just going to make this up. And if you have advisor access, then you'll be able to do a manual journal. If you don't, then that's absolutely okay. And we can do it as your accountants. We can add this journal in for you because realistically, it's not going to impact your GST. It's not going to impact anything other than your tax return. So it can wait until tax time. It can wait for your accountants to do it. But I'm just going to show you for completeness the interest on the Hilux loan. Yet again, you can add the paperwork in here using the little paper button. Just going to put in today's date again. Now, how this one works is we're actually increasing the loan amount by the amount of interest. So I'm just going to put it in as $500 over the life of the loan, and then the rest of it is the unexpired interest. So we're putting it in as a liability on both sides, so up the liability and up on and down on the unexpired interest. And what will happen is every year over the course of the life of the loan, that $500 will be claimed on your tax return or in your profit and loss as a part of the claim. So really really important to get those numbers right, but only from a tax point of view. We can see there's BAS excluded here, so no GST consequences. If you don't put it in, it does not matter. So once we put that in, then we can go back and double check. So I always love to double check my work, and you will see the loan and the motor vehicle both on your balance sheet. So the motor vehicle, the Hilux, is an asset, so this will show in your balance sheet as an asset, and the loan is a liability, so this will show in your liabilities. So we're going to pick today's date, update, and what we'll see in here is we've got our motor vehicle. Let me make this bigger. Here we go. So the motor vehicle, so the $20,000 excluding GST. So it was $22,000 when I put the bill in, but it's only $22,000 because $2,000 of that is GST. And then we've got the Hilux loan. So we've got the $20,000 loan plus the $500 worth of interest. So if we add those both together, it totals the $20,000 that we paid in finance to the finance company, or by the finance company to the bill. So $20,000, and this $500 will go down over time as we claim that interest. Now, the other thing that we haven't done yet, which I'm not going to cover today here, is the motor vehicle depreciation. So depending on the tax year and how the tax depreciation is claimed, we may be able to claim the whole lot of the depreciation, so 100% of the $20,000, in which case we'll see a little minus $20,000 underneath this, and the whole value on the balance sheet for that vehicle is nothing because we've claimed it all from a tax point of view. However, if we're not in that tax 100% claim, then it may only be a percentage of that vehicle that we've claimed that'll be in brackets, and that amount in brackets will go up and up and up until all of it is gone or until you sell that vehicle. So hopefully this has helped show you the steps for setting up a loan in your Xero file, and please reach out for any questions if you do have anything else.